All right, everyone, ready to jump in? We're taking a deep dive into APL Apollo Tubes Ltd's Q2 FY25 results. Got our hands on company filings, press releases, and even some questions straight from investors. And let me tell you, things are a bit more complex than they might appear at first glance.
Yeah, not your typical earnings report this time around. On the one hand, APL Apollo just shattered their sales volume records. We're talking 758,267 tons of steel tubes. Impressive.
Right.
A whole lot of steel. But then when you look a little closer at the profitability side, there's a dip, definitely a dip.
A bit of a puzzle then. Why aren't these record sales numbers translating to record profits?
Exactly the question we're going to tackle.
Our filings show a significant 11% year-on-year increase in sales volume for the first half of FY25, reaching a total of 1,479,331 tons. That kind of growth is massive, but then EBITDA down 30% year-on-year to $4.4 billion.
Oof, yeah, that's a hit.
And net profit shrunk by 38% to $2.5 billion.
Those numbers definitely make you stop and think, especially when you break it down to EBITDA per ton. It's down to 2,972, a 37% drop.
Yeah, that's not something you can just ignore. So let's dig into this a bit. What's APL Apollo saying about this performance gap?
Well, Sanjay Gupta, APL Apollo's chairman, he's pointing to the construction market. It's been pretty rough out there. Specifically mentions wild swings in raw material prices, a really extended monsoon season this year, and a slowdown in how much the government is spending on infrastructure projects.
So some tough external forces they're up against, for sure. But could those external factors alone really explain a profit drop that big, especially with steel prices being all over the place lately?
You're spot on. Those fluctuating steel prices have definitely been squeezing profit margins. And it makes a big difference because it narrows the price gap between APL Apollo's HRC tubes, that's hot-rolled coil for anyone not familiar with all the steel jargon, narrows the gap between those tubes and those traditional Petra pipes.
Ah, so the competition's getting fierce.
You got it. If that price difference shrinks, harder for APL Apollo to justify their premium pricing.
Customers start thinking, why pay more?
Exactly. People become way more price sensitive, and suddenly those cheaper Petri pipes look more and more appealing. Even if they're not as high quality, that price difference is a powerful thing.
Puts pressure on APL Apollo then. They got to find new ways to stand out.
They can't just coast on being the higher quality option anymore.
Seems like they're not just sitting back and taking it, though. They're actually making some pretty bold moves to deal with these challenges.
Oh yeah, their strategy is quite interesting.
They're pulling out the decommoditization playbook, shifting their focus to higher margin, value-added products.
Like moving from selling a basic cup of coffee to a fancy latte, you know?
Gotcha. So moving beyond just churning out basic pipes, they're climbing up that value chain. What are some real-world examples of this in action?
Take a look at their decommoditizing product portfolio table. Products like Apollo Structural Heavy and Apollo Z rust-proof tubes, they stand out.
So they're not just pipes, they're specialized solutions.
Exactly. Tailored for specific needs and applications, and that commands a higher price.
Smart. They're saying, we're not just selling steel, we're solving your construction challenges. But is that enough to overcome these external pressures, these shrinking margins?
It's a great question. One we'll dig deeper into in part 2. Got to see how it all plays out. One thing to consider, will customers really pay a premium in a market that's getting more and more price sensitive?
Makes you wonder, how does APL Apollo keep innovating, keep delivering that extra value to justify those higher prices?
Lots to unpack there.
Definitely is. Join us in part 2, where we'll explore these strategic moves even further, break down their growth plans, and really see how their financial health is holding up in this turbulent market. It's going to get really interesting. So we were just talking about APL Apollo's decommoditization strategy.
Yeah.
It's a big move, shifting to those higher margin specialized products, but is it enough to really handle this turbulent market?
It's definitely a good step, yeah. But like we were saying, a few things got to fall into place for it to really work. Convincing customers those specialized products are worth the extra money, that's a big one.
Right, especially when you've got those cheaper Patra pipes still out there. How are they making sure customers see that value?
Building a strong brand, highlighting those tangible benefits, that's key. It's not just about selling steel tubes, it's selling solutions. Like their Apollo Structural Heavy tubes, designed for high-stress situations, they offer way better strength and durability.
So they last longer.
Longer lasting means cost savings for customers in the long run. They don't have to replace them as often.
Showing that return on investment, proving that sometimes paying more upfront saves you money down the line.
Exactly. And they're backing it up with great customer support. APL Apollo has over 800 distributors all over India, reaching more than 300 towns and cities.
Wow, that's a lot of coverage.
It means they can provide local support, address any concerns quickly, build those relationships that matter in a competitive market.
It's like they're saying, we're not just selling you a product, we're a partner in making your project a success.
That's the idea, and it's smart. A lot of competitors are just focused on pushing out as much product as possible. APL Apollo is trying to create a whole different kind of customer experience, from choosing the right product to what happens after the sale.
Okay, so they're going all in on proving the value of these specialized products, but let's not forget their capacity expansion plans. Those are pretty ambitious. Aiming for 5 million tons of capacity by FY26? That's huge.
Huge investment, too. They're doing both brownfield and greenfield expansions, going big in every way they can.
Downfield meaning.
Expanding their existing facilities, making them even bigger, more efficient.
Gotcha. And greenfield.
Brand new facilities built from the ground up.
Doing both at the same time? That's a lot to handle. It seems kind of counterintuitive, right? Pouring so much money into expanding when profits are down.
It's about playing the long game. They see big growth coming for the Indian structural steel tube market. Urbanization, infrastructure development, more pre-engineered buildings, all driving that growth.
So even if the market's a bit rocky now, they're banking on that future demand.
Exactly. And they want to be ready to grab a bigger piece of that pie when it comes.
These expansions are all carefully planned then, not just random growth.
There are greenfield plants in places like Gorakhpur, Siliguri, and Bangalore. That's strategic. Targeting new markets in South India, West Bengal, and the eastern UP region.
Makes sense. Putting themselves right where that high growth is expected.
And those brownfield expansions, those are all about optimizing what they already have, increasing efficiency, lowering production costs. That helps them counter some of that margin pressure from the steel prices going up and down.
So two-pronged approach then, expanding into new markets while making their core operations stronger. More cost competitive? Got to be able to play that game.
Absolutely.
But those external factors we talked about, the construction market, the steel prices, those haven't gone away.
Definitely adds another layer of complexity to their plans. Slowdown in government spending on infrastructure, that could hit their sales, especially for those specialized products used in big projects.
It's a good reminder that even the best strategies can be thrown off by things you can't control.
For sure, but APL Apollo wouldn't be where they are if they couldn't adapt.
They've got to adjust when things change. How are they handling those risks then?
Financial prudence, innovation, that's what they're leaning on. They've got strong cash flow, and working capital management gives them a buffer to handle market shocks.
Like a safety net then?
Pretty much.
What about innovation? How does that play into it?
Innovation is all about staying ahead of the curve, always developing new products, meeting new demands. They're really excited about their Steel for Green initiative.
Ah, yes. Pushing steel is a sustainable option in construction. Seems like perfect timing, given everything happening with decarbonization. How does this fit into their bigger picture, though?
Honestly, it's a brilliant move. Aligns with a bunch of trends all coming together. You've got that growing awareness of how construction materials impact the environment. Wood, yeah, it's renewable, but if it's not sourced sustainably, it can lead to deforestation. Steel, on the other hand, highly recyclable, can be produced with a lower carbon footprint than those old-school methods.
Tapping into that demand for sustainable building, then, makes sense.
It's good business and good for the planet.
Are customers really buying into this Steel for Green message, though?
They are, and it's not just about appealing to the eco-conscious crowd. There are government incentives and regulations now that encourage using sustainable materials.
So APL Apollo is positioning themselves as the leader in that space.
They are. It's a smart move.
Riding that wave of change, both from the market and from regulations. But it's not just about sustainability. They're innovating in other areas too, right?
Absolutely. Always developing new solutions for the challenges of modern construction. One example, their prefabricated building components.
Prefabricated mean?
Pre-assembled sections of buildings. They can be shipped to the construction site and put together quickly.
Like giant Lego blocks.
Kind of, and it's way faster, more efficient, less waste.
Sounds like it's tailor-made for how fast-paced construction is these days.
It is.
So we've got sustainability, innovation, customer support. What about their financial health overall? Any red flags investors should be watching for?
Their net debt has gone up to $3.0 billion in the first half of FY25. Quite a change from their net cash position in FY24.
Financing those big expansion plans makes sense they'd take on some debt.
Right, and it's mostly due to that capital expenditure program.
But is it sustainable?
Something to keep an eye on for sure. Debt levels aren't super alarming considering their growth potential, but investors will want to see how they manage that debt, make sure it doesn't start hurting their profits.
Debt management's one thing then. What about their profitability metrics, like return on equity, return on capital employed?
Both ROE and ROCE have dipped a bit compared to previous years, but they're still in a healthy range.
Slight dip, but nothing to panic about yet. What's the feeling from APL Apollo's leadership, though? Are they optimistic about the future, or are they bracing for impact?
Sanjay Gupta, their chairman, he's cautiously optimistic, I'd say. He thinks the worst of the steel price volatility is behind us now. Sees it as a chance to grab market share from competitors who might not be as prepared.
Seeing this tough market as a way to come out on top, that's bold.
It is.
But it's not just about market share. It's about reshaping the industry.
Sustainability, innovation, they're not just playing the game, they're trying to change the rules.
And that's what makes them so interesting to follow.
So, yeah.
They're aiming to be a leader, not just in market share, but in ideas, in driving positive change in the construction industry.
Setting an example for others to follow.
We've covered a lot of ground here. There's strategy, expansions, sustainability, financials, leadership's perspective. But there's one big piece missing. How do they compare to their competition?
The big question, that's what separates the best from the rest. And that's where APL Apollo's moves get even more interesting. Remember, they want to be more than just another pipe maker. They want to be the solution provider, the innovator, the standard setter.
Big goals.
They are.
But how do they make it happen? How do they actually beat their rivals?
Hmm.
All right, so we've talked about how APL Apollo is performing, their strategies, all those big ambitions. But what about the other guys? The competition. How do they stack up against everyone else in this steel tube market?
That's the real test, isn't it? That's what separates the winners from the rest. And it's where things get really interesting with APL Apollo. Remember, they're not just trying to be another pipe manufacturer. They want to be the one everyone turns to, the innovators, the ones setting the bar for the whole industry.
Big aspirations.
Yeah.
But how do they turn those aspirations into reality? How do they actually outmaneuver the competition?
It's a multifaceted approach. For one thing, they're laser focused on innovation. We talked about Steel for Green, the move towards specialized products. It's not just marketing fluff. It's them genuinely trying to stay ahead of the game, meeting the needs of the market before they even arise.
So they're not just following trends, they're trying to create them.
Exactly. They're not content with just keeping up. They want to lead the pack.
But how do they make sure they're innovating in the right areas? Avoid those missteps that can be so costly.
They're combining deep knowledge of the industry with a sharp eye on what's coming next. They're watching everything, changes in construction practices, regulations, even global economic factors. Got to be able to anticipate what customers will need tomorrow, not just today.
Like they have their finger on the pulse of the whole system, gathering all that data to make smart decisions.
That's the idea.
But innovation alone isn't enough. You got to be able to execute, bring those new products to market.
Absolutely. That's where their manufacturing strength and that huge distribution network come in. They can ramp up production quickly, and with over 800 distributors, they can get their products all over India.
So strategic vision, innovative products, efficient manufacturing, wide distribution network, it's a powerful combination.
It is.
So who are they up against exactly? Who are the main competitors?
The Indian steel tube market's pretty fragmented. You've got big players and small players all mixed together. Some of APL Apollo's main rivals are companies like Jindal Saw, Ratnamani Metals and Tubes, and Maharashtra Seamless.
So a lot of competition. What does APL Apollo have that gives them an edge over these companies? What sets them apart?
Their brand reputation, that's huge. They've built a solid track record of quality products and happy customers. That translates into brand loyalty, and that's gold in a competitive market.
A good reputation is hard to earn and easy to lose. They've done a good job there.
They have, and it definitely works in their favor.
But reputation alone isn't enough to stay on top. What else do they have going for them?
Strong financial foundation, that's key, gives them the flexibility to invest in growth, R&D, even acquisitions. When things get uncertain economically, that stability makes a big difference.
Like a financial cushion to absorb those unexpected hits that can take out weaker competitors.
Exactly.
And we can't forget their commitment to sustainability. How does that factor into their competitive position?
It's a big differentiator. The construction industry is getting more and more focused on sustainability. And APL Apollo is positioning themselves as the go-to for eco-friendly solutions. Steel for green is the perfect example.
It's not just about appealing to those green-minded customers, though, right? It's about staying aligned with government regulations and industry
You
trends.
got it. It's a smart move that gives them a real advantage.
So it's not just marketing, it's a core value that's woven into their whole business model.
It is.
But let's be real, there are always going to be challenges. What are some hurdles they might face in this competitive landscape?
Managing those steel prices, that's a big one. Like we talked about, those price swings can really squeeze their margins.
Even with their specialized products and the reputation, price still matters, especially for some customers.
Absolutely. So how do they deal with that risk? Diversifying their product portfolio, focusing on those higher margin products, making their manufacturing processes as efficient as possible to cut costs. And they're looking at different ways to source their steel, reducing their dependence on those volatile global prices.
So they're not just sitting back and taking it, they're finding ways to take control.
Right, proactive risk management.
What about those regulations and government policies? How might they impact APL Apollo's position?
Construction in India is heavily regulated. Any changes in those policies can have a big impact. APL Apollo has to stay ahead of those changes, make sure everything they do is compliant.
Like navigating a maze that's constantly changing, they got to be flexible and adaptable.
They do.
Regulatory hurdles are one thing, but what about the bigger picture, the economy? Things like inflation, interest rates, currency fluctuations, how do those play into it?
Those macroeconomic forces, they can impact everything. Consumer spending, investment decisions, how much demand there is for construction projects. APL Apollo has to be ready to adjust their strategies and operations when those unpredictable economic shifts happen.
So many factors to consider. It's like sailing in uncharted waters.
It is.
After going through all this, their performance, their strategies, the challenges, the competition, I'm pretty impressed. They seem to have a clear vision, a strong foundation, and the drive to succeed.
They do. They're not just riding the wave, they're trying to shape it. Pushing boundaries, challenging the status quo, setting a new standard for the industry.
It's a great story. Ambition, innovation, resilience, all wrapped into one. As they keep growing and changing, it's going to be fascinating to see what they do next. What moves will they make? What new innovations will they come up with? How will they keep evolving and adapting to this market that never stands still? Lots of questions to ponder as we move forward. And as always, we'll be here diving deep into all the latest developments, bringing you the insights you need to stay ahead of the game.
That's what we do. Until next time, keep learning, keep exploring, and keep those questions coming.
And that wraps up our deep dive into APL Apollo Tubes Ltd. Thanks for joining us. We'll see you next time for another deep dive into the world of business and finance.